up, everyone? Thanks for joining me on D's Analysis. Today we're going to be looking at Tesla. We've been riding up this trend line. We've had a couple touches ever since January 3rd, 2023. We've been riding up. We got a strong bounce. Let's see how the week finishes out tomorrow. We've been also riding down this trend line at the same time, November 2021, all the way down. We finally broke out November 4th, and we've pulled back all the way back to the breakout point. We've lost all the gains, essentially. We pulled back a total of 55%, and we're currently down 50% from the all-time high. But I wouldn't be worried if you're a long-term investor. This should be a buying opportunity more than anything. We fell back below this level of support. It is now resistance. But I also do believe that we could get a clean move back up since there's not much traffic on the left-hand side. So when you get clean moves down, typically you'll get a clean move back up. Even if you look here, this was a clean move up, and it was able to make a clean move down because of this. There was no traffic here. Once you broke below this wick right here, it was just a clean move. So you can see that happening. And I could see it happening back to the upside, especially since Tesla gets going really quick. When we take a look here on the MACD, we're pretty bearish at the moment, increasing volume towards the downside. We've already crossed over on the weekly. On the daily, we're actually looking very good on the daily. Still bearish volume, but once this starts to cross back over and we get that blue back on top of the orange and start building up, we can start flipping and getting these green candles to start up and creating that momentum to push to the upside. And Tesla's one of those stocks where it'll just keep being green day after day after day once it gets going and the sentiment is positive around it. On the RSI, we are extremely oversold on the daily. I mean, all the way down to 19. That is insane, actually. Not financial advice, but if you're a long-term investor, this should be a good opportunity for you. The odds of us pushing back to the top of the channel or range is more than likely going to happen with time, of course. We're even reaching oversold levels here on the weekly RSI. That's good because maybe we can get like a double bottom or a triple bottom, how we've seen here, and push back up to the upside. So maybe we get something like this, or maybe we get a V-shaped recovery to the middle or to the top of the range. On the Bollinger Bands, we bounced off the green band at the bottom, got a nice wick off of that. So there was a good amount of supports with the band, SMAs. You got trend lines underneath you, so there was a good level of support underneath. We'll go over SMAs in a second. So let's see if we get a clean move back to the blue line, back to the midsection. On the daily, it's looking a little funny, but maybe we get a move up to the blue as well, since we've already hit the green band. In terms of SMA, on the daily, we're underneath all three. We definitely want to regain. We want to capture this 200-day SMA. That's a strong level of resistance and support. As you know, the SMA acts as resistance and support as it moves with the price. It's a lagging indicator. Now, one thing that we definitely do not want to lose, which we're already underneath it, is the 200 week. That's a very, very strong level of support and resistance. So hopefully tomorrow we get a close at least of 248 or higher so we can hold that. And then maybe the next week we get a wick down and push back up, and then we recapture the other moving averages. But we definitely want to recapture the 200-day and the 200-week, especially because we don't spend too much time underneath the 200-week. As you can see, it usually gets moving pretty quickly off after the 200-week. We definitely want to recapture that and get some bullish momentum behind us. So we're going to look at some Fibonacci retracement. So I pulled a fib from this first peak, this first local top here in September 2013, down to the start of the move right here, November 12th. I'm going to do the same thing here, and we're just going to try and see if there's any correlation between the two. So I'm going to go down to the bottom, extend it out. Okay, so we're going to just compare the two, see what we can see between the two. So we had two aggressive moves, as you can tell. We had a dip from that first move to the golden zone of about 40%. It bounced off the golden zone, which is the 0.618 to the 0.5. So this is the area. Here we had an aggressive move up. We also took a dip to the top of the golden zone actually this time. And that was a 40% move as well. So you had both of them had 40% pullbacks after the aggressive moves up, and they both landed on the golden zone. And they both bounced right after that. So we had a bounce here, and we had a bounce here. So they're looking pretty similar already. And then they both ended up pretty much stopping at the 1272. As you can see, both stopped at the 1272. This one was more like a triple top or something like that before pushing down. But as you can see, they're very similar, these moves. And after that, we actually pushed up to the 1618, and we kind of had a downtrend after that. Now here, maybe we didn't touch the 1618 because of the 2022, I wouldn't say recession, but we had that downturn economically in the market. So maybe that's why there's a little bit of deviation. But there's still a downtrend as well, which is very similar to this. And then we had a breakout, and we had a breakout here. Now, we didn't retest it until June 19th, and the breakout was 2 years prior. So I don't think that's going to be the case here. Maybe it could be. But if we retest this in 2 years, that trend line, it's going to be much lower. You're talking like 150 or something like that. But these are interesting things to look at. Let's see how many weeks it took for that first touch of the 1272 before price actually broke above that. That was 162 weeks, roughly. 162, 163, give or take. And then we touched it here, the 1272, before we actually had an aggressive move and actually broke above it. I wouldn't really count these because they were kind of just retests. But where we actually had a solid breakout was about here, which is 162, which actually kind of lines up. We had an aggressive move out. So let's see how it ends up playing out. From the actual initial breakout of the trend line, it took 987 days or 140 weeks before we had the real move up. It took 123 weeks from the breakout to find the bottom and actually start rallying up. 123 weeks. We had our first breakout. I wouldn't even call this the breakout. I'll say this because it retested and went back in. 123 weeks would put us out to March 2027 if everything lined up. That doesn't have to be the case, of course. It's just lining up these two and just speculating, that's all. And let's line up the amount of days from that first local high, that peak, to the breakout. The initial breakout, the 174 weeks. Let's see what this one is from here to the breakout. Pretty close. About 198, so a 20-week difference. I mean, that's pretty close though. When you look at these large time frames being only 15 to 20 weeks off, is pretty crazy how these things are lining up. So let's see if it ends up playing out the same. Maybe we chop sideways, or maybe this huge drop that we got, maybe this is what we're getting now. Maybe it's being like early. Maybe we are here instead of here. Maybe this is where we're actually at. And we're getting this move before the move up instead of sideways chop. Who knows? Because this is an aggressive sell-off, just how this was. So maybe we're actually here instead of here. Nobody knows, of course, but maybe it's a little sped up and we get that aggressive move to the upside after. So something interesting that I see right here actually is that I just pulled a fib from here, this top right here. So right there at the 1, that's where I pulled the fib, down to the bottom here. So I pulled it from here to here, captured this entire move. And when we shot up, the initial target that we hit was the 2618. As soon as we hit it, we fell down almost instantly. See that? An aggressive sell-off. As soon as we touch that, boom. I'm going to take this one and do the same thing and see what we get. So we're going to line up the top here. I'm going to do it far out so we get more visual. And we're going to go to the bottom, which is right there, about 1146. So what if the next move takes us to 2618, which is $1,200? That's crazy. And that was a bounce, of course. It was a bounce off it looks like it's a bounce off the golden zone if we recapture this right here. Always a golden zone in the mix of something. Before the move up, we bounced off the golden zone as well here. The 0.5 to the 0.618, we bounced off the golden zone before we ran up. We've been playing around the golden zone, falling underneath, catching, getting up top, falling underneath, and right now we're just underneath it. So what if we close inside, maybe recapture it, bounce off? What if the next target is the 2618, which would be $1,200, which would line up with this move here? But maybe it doesn't happen this year or next year. Maybe it is 2027 or something like that. Just something to take note of. You guys let me know in the comment section what you think. I'll see you in the next one.